Hello, and welcome to this webcast on appropriations under exposure drafts or ED for PBE IPSAS 47 revenue and PBE IPSAS 48 transfer expenses. This webcast is for preparers, auditors, and users of financial statements of Tier 1 and Tier 2 public benefit entities, also known as PBEs, which includes both not-for-profit and public sector entities. I'm Leona van Heerden, Senior Project Manager at the XRB. Today, we'll explore how appropriations are treated under these proposed standards. I'll also be joined by former New Zealand Accounting Standards Board member Warwick White, who will share his thoughts on this topic. Before we get into the detailed requirements, let's begin with what is an appropriation. An appropriation is an authorization granted by a legislative body to incur expenses or capital expenditure for purposes specified by the legislature or similar authority. This concept of appropriations aligns with the New Zealand Public Finance Act and is consistently used in the revenue and transfer expense EDs. Importantly, an appropriation does not automatically trigger an accounting event or transaction. It's an authorization to incur expenses or capital expenditure and therefore does not guarantee enforceability or funding. Let's take a step back and remind you of the important binding arrangement principle in these proposed standards, which is an arrangement that confers both rights and obligations enforceable through legal or equivalent means on the parties to the arrangement. For more information on this important principle, which is at the heart of both proposed standards, please refer to our binding arrangement webcast on our website. So the question that arises is, how does appropriations impact the binding arrangement assessment? The answer is that appropriations may be one of the relevant factors to consider when assessing whether a binding arrangement exists and is enforceable. Appropriations do not on their own prove or disprove enforceability. The key is to assess the arrangement in its full context, taking into account the unique terms and conditions of the arrangement and assessing whether both parties have rights and obligations that are enforceable due to consequences an entity will face in the event of non-compliance. Once you have established whether an arrangement is binding or not, the relevant revenue and transfer expense recognition requirements per the proposed EDs should be followed. When assessing appropriations, as a factor in the enforceability assessment, you will consider if the appropriation has substance. This slide illustrates this concept of substance. If enforceable rights or obligations exist before the appropriation process is completed, then the appropriation clause does not have substance and will not impact your binding arrangement enforceability assessment. However, if the arrangement is not enforceable until the appropriation is completed, then the clause does have substance and the arrangement is not binding until the appropriation is in place. You may ask whether appropriations in New Zealand have substance, and the answer is that it may be rare for appropriations to have substance. Most arrangements are already in effect due to other enforcement mechanisms, such as enabling legislation. Therefore, an appropriation merely serves as the authorization to incur expenses or capital expenditure. To put this concept into further context, both proposed standards have illustrative examples that depict two scenarios, one where the appropriation has substance and another where it does not. Now, over to our conversation with Warwick White, former New Zealand Accounting Standards Board member who contributed to refining the appropriations requirements in the proposed EDs to make them fit for purpose in New Zealand. Warwick will share his thoughts on the board's key considerations around appropriations. Warwick, thanks for joining us today to provide your thoughts on appropriations per the proposed requirements in ED PBE IPSAS 47 revenue and ED PBE IPSAS 48 transfer expenses. To kick it off, can you please explain from the board's perspective what were the key considerations in ensuring the guidance on appropriations in these EDs is fit for purpose for New Zealand?
Look, thank you for this opportunity, and I'll give my perspective as a member of the board, which is that when considering adopting standards, the board considers whether any amendments are needed or useful to reflect New Zealand's context. So the role of appropriations in New Zealand's public finance system was one of the areas that we identified as needing closer attention. So we discussed this appropriations with different New Zealand stakeholders. Board members were in attendance with these and participated in these discussions. And we covered the different types of appropriations we have in New Zealand, how they actually work in practice, and how these insights compared to what was in IPSAS 47 and 48 that we received from the International Board. And now the International Board framed appropriations as a form of a funding source, whereas in New Zealand's context, they are authority to incur expenses or capital expenditure. They're not a funding source per se. So the outcome of this work anyway was that we adjusted the definition in the proposed exposure drafts of an appropriation to align them to this New Zealand context.
Great, thank you. Moving over then to my second question. When considering the proposals in these EDs, what is useful for stakeholders to know about appropriations?
Well, I think there's 2 points I want to pull out in regard to this. The first relates to appropriations in general. So appropriations may be a factor to consider in determining if there is a binding arrangement. Specifically, a preparer may consider the role of appropriations in making an assessment of whether the arrangement is enforceable. However, I say they may be a factor to consider because, as mentioned earlier, appropriations are enabling authority. They do not in themselves provide funding nor an obligation to provide funding. So in practice, transactions that flow from the appropriation authority are often accompanied, or almost always accompanied, by other documentation such as funding arrangements or delegations. They have their norms and practices that support the appropriation process. So I expect that it is these other documents and practices that will be more critical for preparers to look at when making an assessment of whether there's enforceability involved in the transaction. The other point I want to touch on is social benefits. So social benefit transactions such as unemployment and superannuation payments, they are within the scope of the proposed PBE IPSAS 48. In the New Zealand Government, these are all subject to appropriations. The proposed guidance in PBE IPSAS 19, which will be added as a consequence of bringing social benefits into the scope of PBE IPSAS 48, states that a present obligation for social welfare payments at the reporting date arises only when the intended recipients, such as the beneficiaries, have satisfied the criteria for entitlement to those payments for a payment period that occurs before or encompasses the reporting date. Now, there's a lot to grip up in that, but my assessment is this closely resembles current practices in New Zealand. So there may be little change for preparers who provide social benefit payments. However, preparers will need to review these requirements and the guidance in the EDs and the standards to make their own assessment with regard to their specific practices and policies in respect of social benefit payments.
Great. Thank you, Warwick. That's good to know. So with that being said, we'll now return to the main webcast. Thank you. That brings us to the end of this webcast. To recap on what this means for you, when considering your arrangement and whether they are binding or not, some of your arrangements may be subject to an appropriation process. These appropriations should be considered as one of the relevant factors in your enforceability assessment. This slide includes references to where more appropriation guidance can be found in the proposed standards. Be sure to watch our other webcasts on our website for further details on the binding arrangement principle and the proposed accounting for revenue and transfer expenses. Please also keep an eye on our website for details on events and other information relating to this consultation. And please note that this consultation closes on 1 December 2025. Thank you and goodbye.